funds, hedge funds, private equity, who are going to take up the activities that a bank can't get around. But the bank, of course, will be interlinked through some sort of derivative or some sort of agreement with the various shadow banking institutions that aren't as heavily regulated. And I think when you have your next problem, it will probably be in that area. So just to kind of sum up what I tried to convey to you guys is you have an incentive for the industry to get around the rules that are being imposed on it. And I mean, case in point, this structure, I mean, we're writing the CDS contract, we're writing this. You know, we're writing the call option, and then we're getting approval. So we're taking this group of rules and we're saying, okay, how can we get around this to benefit us? And I mean, this is just one example, but there are numerous examples of this, and this will always be the case. So how do you make the system more safer? In my opinion, you make it more simplistic. But restricting capital flows, managing capital flows in more of a blanket manner, basically saying this institution can risk this institution can risk that. It's not something that, at least at this point, people are willing to do because it's going to restrict the growth of an economy. So yeah, that's really what I wanted to try to convey to you guys, and you know, I'm happy to take any questions. I don't know how much any of this sunk in. I don't know if you have any general questions, but that's kind of yeah, very generally what I wanted to convey. Does anyone have any questions? Anything like that?
I have a question. It's a more general question about people who influenced your life the most. I mean, maybe economists, scientists, or writers.
I mean, I very much always had interest in getting into the financial services industry. When I was a young kid, one of the first books I tried to read was Donald Trump, The Art of the Deal in Real Estate. I don't know why I was interested in it, but I was just interested in that book. I love playing board games, Monopoly. Trump had a board game too, so I had that. Going maybe to my more recent years, I would say that I think when you look at financial services and you look at economics, it's really a study of people. And I'm always very interested in knowing how people think and how they react to certain points of view and certain information that comes into their purview. Because when you think about a stock or you think about a bond, what it's worth, it's ultimately worth what somebody else is going to pay you for it. And you can make it as complex as you want, mathematically, so on and so forth, but if you have a panic setting and nobody's selling, and nobody's buying, there's really not much you can do. So I think, you know, what's really intrigued me as of late would be seeing how different people interpret these different type of crises that have come into play as of late. Because again, I mean, that's really what makes this market. I mean, we're active participants in this market. We're not looking at it through a glass window. You know, people are making a decision that's impacting the world around them. So.
Thank you.
Anyone else?
Speaking about different regulators, how they change your strategy in business? I mean, maybe UBS, when you have a lot of regulators, it is harder to make business. I mean that it is money in the economy decreases, and if you have an opportunity to be more safer or be more profitable, what do you prefer?
I think anytime you see any media and see anyone at a high level in a bank, they're going to say they want to be more safer. That's what they're going to say. The way I would kind of describe it is you have a big field of regulatory arbitrage coming into play now. So for Basel III, for instance, depending on what country you're in and how your industry is structured, you're going to adopt rules that benefits your industry, right? Because if you're a politician, you're talking to your regulator and you're saying, okay, the banks in France, they have a lot of insurance subsidiaries. We want to count the capital that we've used to capitalize those subsidiaries as part of Basel III capital, as part of the buffer to our risk, all right? Basel III framework says you can't do that. So the French regulators say, oh, we're going to do that. Case in Italy, I believe, one of the things you cannot count as capital is deferred tax assets. And I believe there are a number of banks in Italy that have huge DTAs. So there's discussion over whether or not you can count that towards your buffer. And I mean, you have the BIS entering into these, publishing these rules, but the SEC, the FSA, all the different regulators for each country are going to adopt and get rid of what they want and what they don't want. And when you talk about a global bank, they can structure their operations to make those flows more efficient. So if DTAs are going to be counted as capital in Italy, guess what? You know, if I'm a UK bank, I'm going to put all my DTA into an Italian subsidiary, right? Because I'll be able to count that as my buffer. So you have a lot of what's called regulatory arbitrage now. People kind of manipulating the system per each country. Because it's a global system. It's not something where you have a US bank, Chinese bank, an Indian bank. Usually everyone, the bigger guys, they have their fingers in many different areas. So I think you're seeing that a lot now.
What industry is the most interesting for investment bank to invest money in the USA?
To be perfectly honest, I think there's been a lot of retrenchment in investing. I think people are very nervous about what's going on with Basel III and what's going on with the various different governments regionally, like what's happening in the European Union debt crisis. So I think people are not really taking on a lot of risk because they don't know how they're going to be penalized for that risk. The rules haven't been written yet. They're still being written. I mean, I think going forward, what you'll see is there's legislation within Basel III where if you have a bank that's called too big to fail, basically a bank that would take down the whole financial system if it were to collapse, they'll have to maintain higher levels of capital, a higher buffer against the risk. And those institutions will have a lower cost of capital. So if they want to borrow money from their central bank, they won't be charged, they'll be able to borrow more and not at a higher rate. So I think you'll see kind of a change to the really big banks doing more commercial banking operations. And then you'll see more smaller niche players, like maybe a Goldman or an RBS specializing in different areas. Like you see now a lot of the banks globally divesting in areas where they don't have a good return on capital, where for the amount of capital they're risking, the profit they're getting is relatively small. Capital is such a scarce resource that they're saying, okay, we're going to get out of this business, and we're going to go to the businesses that we're good at. So I think RBS just published that they were looking to get rid of their US equities brokerage business, I believe, because they're not getting a high return. And you see that with all these different institutions. They're basically looking to say, where can we get the highest return on capital? Do you guys know what capital is?
Yeah.
Yes? So yeah, I think you're going to have, for commercial banking, a couple of very big global players who are going to be able to lend and earn fees from the interest margin. And then I think you're going to have some niche players who are going to do a lot of flow businesses, so like fixed income, equities, do volume businesses, where they're not risking a lot of capital, but they're just trying to earn profit on the amount of turnover they